This Friday, November 18th, we will be releasing the S&P 500 screener. In excitement and anticipation of this release, we want to run a series of webinars, of which today is part 2, in which we discuss ways that the screener can be used to help our investing. This doesn't mean just new strategies that you have to stop doing everything you're doing right now and start doing this instead. These strategies are meant to be familiar. This is supposed to be something that you can you already are doing, and this would maybe change it a little bit, or just save you time overall. Now, again, this week is part 2. Last week was part 1 of this series, and we talked about how this screener can save us time and lower the number of sites that we need to visit to find who the leading sector is. Before, if we wanted to go from leading sector to leading company, we needed 4 websites, 3 subscriptions, and a lot of time. We then showed how it could be done in 5 minutes or less using Sectors Made Simple alone. Today is going to be part 2, and it will save you a similar, if not larger, amount of time, and gives us a piece of information that no other website offers. I can confidently start saying things like that. This is entering areas and territory that no other website offers. So we are extremely excited to be able to offer this and highlight how it can be used right away. So that new piece of tech is going to be what we'll talk about in addition to this strategy. If you haven't seen part 1, I would recommend going to watch that, but just so that you don't need to go immediately watch that right now, you can keep up with what we're talking about in today's webinar. Here's a quick review of this S&P 500 screener. This screener is going to be the newest tool that is coming to Sectors Made Simple. It will be available to all subscribers, included with your current subscription, and put onto the dashboard alongside the matrix, custom matrices, backtesting, and more. This screener will take advantage of many of the things that we love about the current matrix, including relative strength. But taking it a step further and going beyond just a matrix and taking it into the world of an actual screener, it will combine some technical indicators from point and figure as well. So it will be a matrix that compares the 500 companies in the S&P 500, but it will also offer point and figure chart information, such as buy signals and current direction, columns of X's and O's, and coming soon, trend lines, in a way that is easy to read in a table and allows you to search and filter for stocks. Once again, this screener will be releasing this Friday, November 18th. If you asked me, what is the strongest sector to invest in? There's a reason I would not tell you BPI. I would tell you the matrix. Look at the matrix, sort by total count, that's your overall sector leader. To put this into other terms, trying to use BPI is like trying to say who the best sector is like trying to pick the best soccer team by the number of goals they scored. Just because they scored the most goals doesn't mean they won the most games. They could have scored all of those goals in a single game and then scored 0 in every other game. What matters to us is how many games they won. If we're trying to find the best team, we care about the team that won the most games, not the team that scored the most goals or had the least penalties. So, let's look at the S&P 500 screener, because this screener offers us a great, and I would say almost perfect, solution to this problem. What is the sector leader? Equal weighted? Sector averages. Sector averages takes everything that's great about BPI being equal weighted and everything that's great about relative strength, smushes it together, and puts it into a table. In this table, we get average values for count, percentage, rank, and percentile for every sector. Do you need to use all four? No. Use the one that makes sense to you. If you think more about it like rank, use rank. If you think about it as percentage, use percentage. Again, having 4 options to choose from might seem overwhelming, but remember that all of this is based off of count. Count is where everything else branches down from. Count tells us rank. We order things by its count and then say, all right, first, second, third, fourth, fifth. Percentage is based on count divided by the total. Percentile is based on rank. We already know rank is based on count. Count is the papa. All of the others are the little children. So with count, because everyone comes from count, all of these values will be close to, if not exactly the same. So if you need to look at one, count is where everything comes from. That's, in my opinion, the one that I would look at. Currently, and for the matrices that I tested for making this presentation, they were always the same. The order of top to bottom was identical for any of these 4 columns. Is this always true? I did a sample. I checked 4 or 5 different matrices and found that they were all the same. I will not say they will always be the same. Again, I will never promise you something that I don't have concrete, undeniable data to back up. From everything I tested, they were the same. They are all based on count, and if I had to look at only one, count is the one I would look at. Getting out of the kind of just complication of things, just getting back to thinking about this in a simple way. Doesn't matter which one of the 4 you use, they'll all give you about the same thing or the same thing. We're going to use count today. Count is perfect for what we need. If we need to know our sector leader, and we're looking at companies, what better way than to know the average score for all the companies in that sector? This makes it equal weighted because large companies and small companies still count. Think about it like this. It doesn't matter if you invest in Tesla or a penny stock. 5% return is 5% return. We care about percentages here. 5% return profit is going to be 5% profit for big companies, small companies, and middle companies alike. So with that said, let's go and take a look here, and let's look at how this table gives us strength and how different this can be than what the matrix shows. Here is the current matrix. Is the momentum table going to work? It is. Hooray. All right. Here was sector leadership on November 14th. Materials, industrials, technology. Technology is tied with financials, energy for third. So I'm going to write those down. Materials, industrials, technology, financials, energy. What do we find if we go to the screener, we sort by count, and we go total count? We need to go to today. Things have changed just a wee bit. Cool. All right. So we had, in order, materials, industrials, and then a 3-way tie between technology, financials, and energy. What we find if we look at average score. is technologies from first, materials, cyclical, industrials, energy. Slightly different. If we sort by X count, it's once again different. Energy is first, technology is second, communication services is in third. Hello, communication services is last on the matrix, but is second in short-term X counts. The average X count within communications is ranked third on the matrix right now. I want to show you something interesting too. Let's just take technology as an example here. We can go and we can look for technology equal weighted ETF and compare it against technology. Right now, equal weighted is in a positive trend above the trend line, column of X's and buy signal compared to technology. So right now, equal weighted is performing extremely well. How about if we do that for communication services? We can look for that. Here we only have two going for us. We have a buy and positive trend, but currently in a column of O's. What I'm trying to get at here is equal weighted is not worse. They're different. And the best thing we can do is learn when we should use one over the other. If we're looking at companies, 5% return in the smallest company in the S&P is the same as 5% return in the largest company. So understanding relative strength and using relative strength to find leadership is the preferred thing for us to do and is made simple with this sector averages table. I feel like I've talked around a strategy quite a bit. Let's use the sector search to do a strategy. Again, I will continue to say this. These tools are brand new to me as well. The strategy I'm about to share has not been backtested using the backtesting engine. It has been manually tested by me doing what I'm about to show you. We do not have the ability to backtest strategies with this S&P 500 matrix screener right now. It is something we will offer in the future, but again, when we're talking about a strategy and we're talking about returns, I need to be very clear about this. This is not a strategy that I have 5 years of data to show what's happened. This is a strategy that I've tested, that everything I've seen looks very good and is doing extremely well, and I want to share with you all as a starting point for how we can look at using this matrix. This strategy, again, I didn't just pull this out of nowhere. I didn't go and just say, all right, let me try 50 different things. I'll pick the one that works. How I picked this strategy is super simple. I took the I took the matrix strategy. Trade every Friday, 2-week momentum, take the highest X count as long as it's above 2 or more. I took that and applied it to the S&P 500 screener. So instead of using the 11 sector ETFs in SPY, we're using the 500 companies in the S&P. So let me show you the strategy in a little bit more detail. Just like our matrix strategy that we've talked about before, the strategy we're talking about today would trade once a week on Fridays and would use Thursday's matrix to make its decision. First thing we do, instead of trying to just find the leading sector, now we can go one level deeper. We go and we look at the S&P 500 sector averages, and we find the leading sector for X count. We then filter momentum for 2-week momentum and set the sector to be the sector we found in the previous step. We can now sort by X count momentum and take the stock that has the highest X count momentum as long as it's positive. This seems a little confusing, but again, let's step through what it is. It's the same thing as the matrix strategy we already know. Same momentum period, same X count being what we look at. But to find, because again, we can filter by sector now, we filter by the sector who is our sector leader. For that, we're going to be using this. Is X count better than total count, better than positive trend? I don't know. Once we have back testing and we can do this test ourselves, I would love to find out. But for today, we're just going to use, we can use either X count or total count. I'm going to use X count. We're going to start with Thursday's matrix. And again, this is the kind of thing that it can be done in 5 minutes or less. We find technology. We can't do the 10th because we don't have a week's worth of data for that. We can do the 3rd. Sector leader is energy. So we come here, momentum period, 2 weeks, filter by sector, energy, sort by X count, TRGP. This is just a little Excel sheet that I made for us to be able to test these strategies. So we're going to go to, what did we say? The 3rd. So we bought on the 4th, because remember, if we're looking on Friday, we have Thursday's matrix. So we would be trading on Friday using Thursday's information. And then we go here to the 11th. 1.2% return. We fell short of SPY. Okay. Let's go again. Energy again. HES. So now we're going to go here. And we bought on the 28th. Sold the 4th. SPY went down 0.9. We went up 2.2. Okay. We go back again to the 20th. While that loads, we're going to come here and get our test ready. Energy again. WMB. Fell short of SPY by 1%. The 13th. Once again, we'll go back. The 14th to the 21st. Energy again. HAL. 10.8%. One more for good measure. 10.6, so we would buy on the 7th, sell on the 14th. Energy, APA. Okay, how about we end on a good note, shall we? Again, my goal today is not to show you this is the one strategy you should be using for the rest of your life. Believe me, I did this 4 times. My goal in doing this is to show you, 1, how fast it is, and 2, that with no tuning, with just picking a strategy out of thin air, it works pretty dang well. VLO is going to be our last choice. 7%. Is this going to be the strategy that you throw all your money into just because I looked at 7 investments and it was perfect? No. Does this strategy have some value? Yes. Is it performing similar to or better than the market? Close to it. This is enough for me to be able to share this with you all as something that I've found and is the first step towards creating a real matrix strategy using the screener. Again, my job is not to sit here and sell you on this is going to be the only strategy you ever need. Every strategy has its goods and its bads. The thing we hope for is that we win more than we lose. We win more often than we lose, and we also win more than we lose. For this strategy, it's doing that. It is returning profits, and it is keeping up with the market. This is something that I plan on testing much more. I want to be able to cover this in a lot more detail and provide a lot more data on Friday's webinar, because this is where I see the simple value. Sectors made simple is always our goal. The matrix strategies and these very simple processes that take less than 5 minutes are something that is the easiest way to get started with us. It works with the matrix. I want to find a strategy that works with the screener as well. One lets you invest in broad sectors. One lets you invest in individual companies. Once again, for anyone that is already actively investing, I don't expect this strategy to take away from what you're already doing. The goal here is that you can look at the matrix. You can look at these webinars that we're doing on this screener and find ways that this can help you invest your way. It's not about telling you you have to invest my way. It's about giving you more tools and information to invest your way. Simpler. Giving you more information with less websites and less subscriptions needed. What I've shown today is just a simple way that that information can be used. Without anything else, without any thinking, you plug it in, you go, and from what we've seen so far, there's something to it. It is working, and if we look at the S&P 500 over the same period of time, it's only up 4%. I wasn't keeping track, but I think we would be up a little bit more than 4%. Actually, we can take this to the 11th. 10%. All right. Goalpost is a little bit higher. But it's not impossible. And again, this is if you're trading every single week using this strategy. There are also similar ways to take this idea and instead of selling it off once every week, you buy the stock and you hold it. We are looking now at stocks, not sectors, that the movement is going to be a lot smaller, so we need to be jumping from ship to ship to ship. Individual companies can make a portfolio. You can hold on, you can go in here and just say, I want to buy a stock today for short-term profits. What do I buy? You go in, you find it, you buy it. This doesn't need to be the once every week you change what you're investing. That's for sector rotation. Is that needed for investing in companies? I don't know. But I want to find out. And I want to share that journey with you. What I've shown you today is step 1. Hey, I have an idea. Does this matrix strategy work with the screener? There's enough here to say, yeah, it does. This is step 1. Step 2, step 3, and on, we'll get to explore together. But for step 1, I just want to throw something in there and see if anything good comes out. A lot of good came out of it. And there is a lot of value to this that I want to continue exploring with you all. So let's go now and just quickly review the takeaways from today's webinar. They're a bit out of order. When it comes to finding a leading sector, the question is a lot harder to answer than we might think. The S&P 500 screener offers us an answer to this, a way of finding a leading sector using relative strength in a way that no other website or service offers. It allows us to find using companies, not just cap-weighted sector ETFs, what the best sector for us to invest in is. If we want to invest in companies, we should be looking at companies. This is one of the only tools, if not the only tool, that uses relative strength and point and figure to do that. We've also looked now at a strategy that works. A strategy that takes less than 5 minutes, even I would say less than a minute, to make a decision on what to buy. And while this is still way too early to say, this is the new and best strategy and the only thing you'll ever need, this is step one. The tool is not even out yet, but I wanted to give us something to start exploring together. Something that we can use as a way of exploring what this tool can do. The more ways that I can show how it can be used, the more chances it is that one of them really makes sense to you and inspires you to start using it and exploring how it can help you to invest simpler. I don't expect every strategy we talk about to be the one that you're like, yep, that's the one for me. But the goal is that at least one of them is. That you find a way that this screener can be used to help you invest simpler. Save you time. If it cuts down on the number of subscriptions you need, saves you money, and also gives you more confidence in your decision. More information, well, it can be overwhelming. If put to the right uses, is very powerful. And what we have here is a lot of information, and I will be here with you every step of the way to show you how this can help all of us invest simpler. Because this is only the beginning. The next time we talk, the S&P 500 screener will be available for all of you to take advantage of. I'm extremely excited for this to be something that you will be able to use. And if you have any questions, run into any bugs, or have any requests for features, you can always send us an email at support@sectorsmadesimple.com. It's great to hear from you all. It's great to hear how Sectors Made Simple helps you to find your bull market and help you invest simpler. So, from me and the entire Sectors Made Simple team, thank you all so much for joining us today. We'll see you all on Friday for the official release of the S&P 500 screener. Thank you all so much. Take care.